The future of the global financial system is far from certain, and yet understanding the different directions in which it could evolve is of paramount importance for industry players today. Over 8 workshops and numerous interviews, the World Economic Forum worked with over 250 industry executives, regulators, policymakers and academics to develop 4 challenging visions for the future of the global financial system. 2 key uncertainties separate these visions. First, the pace of geo-economic power shifts. Second, the degree of international coordination on financial policy. Behind these dimensions lie over 40 interdependent driving forces. The resulting 4 scenarios are titled Financial Regionalism, Re-engineered Western Centrism, Fragmented Protectionism, and Rebalanced Multilateralism. As Yogi Berra once said, it's difficult to make predictions, especially about the future, but it is useful to imagine what could happen and how you, your organization, and the entire system might respond to, or even attempt to shape the future. It's November 2020, and the trilateral trade talks have just broken down again. In financial and economic terms, the world is now divided into 3 regional blocs. First, the European Union, where the 2010s have been marked by pensions crises and the use of nationalized banks as blunt tools of government policy. Second, the Democratic Trade Alliance, established by the United States in a vain attempt to preserve its global leadership role based on free markets and financial innovation. And third, the fast-expanding Eastern International Economic Community, a group of emerging powers set up in 2015 in which financial regulations emphasize prudential controls, tight capital requirements, and government intervention throughout the market cycle. Goods and services flow freely within each of the 3 blocks, but barriers between them are high. Severe differences in regulations mean that global firms tend to operate as tri-regional entities and have developed very different strategies across regions. However, with the largest population, higher levels of innovation and stronger growth, nobody doubts that the power in this tri-divided economic world lies within the former emerging economies, today's Eastern powerhouses. It's November 2020 and less than a decade since Bretton Woods II was supposed to have rewritten the rules of international finance for the 21st century. Today, the hot topic of conversation is Peter Higgins' Towards Bretton Woods III, a roadmap for reforming institutions and policies. So what happened?
Well, it is true that the swift and effective coordination of Bretton Woods II restored confidence and liquidity to global markets, allowing the US and EU quick recovery, although emerging markets took longer to bounce back. And the institutional reforms did give developing countries more say in international financial policy. But the leaders of the emerging powers are again arguing that their presence at the table is still far too ceremonial. And financial experts worry that the regulatory reforms didn't go far enough in tackling the underlying risks posed by procyclicality and investor behavior. With markets more integrated and regulations more homogenized than ever, another global financial crisis could be unthinkably severe and far-reaching. We regulated well the last crisis, but are we really prepared for the next one?
It's November 2020, 12 long and difficult years since world leaders descended hopefully on Washington to discuss how financial policy might become internationally coordinated. Today, similar discussions are rare as most countries are busy fighting for resources after a decade which has seen conflict proliferate and multilateral institutions disintegrate at a terrifying rate. It was the United States falling ever deeper into recession which led to the retreat from globalization in the early 2010s, as the American society and politics became more inwardly focused, increasingly opposed to outsourcing and free trade. This sparked a wave of regulatory tariffs around the world, along with new restrictions on foreign ownership and ultimately currency controls. The Eurozone fell apart, with only a few countries retaining the euro. Previously harmonious regions of the world saw military clashes over territorial disputes and natural resources. At the same time, stagnant growth in China provoked huge internal unrest. With international institutions overwhelmed by localized conflicts, cross-border trade today depends on bilateral agreements, which are increasingly linked to military alliances. Financial regulations are in flux, like most domestic markets. It's a tough time to be in business, but perhaps over time this fragmented protectionism may give way to another era of global cooperation. It's November 2020, and a fundamentally reformed IMF now coordinates global financial policy from its new base in Singapore. The global financial ecosystem has finally evolved, but only after a decade in which established economies stuttered, while new Eastern powers won the battle of ideas regarding financial regulations. The increasingly aggressive re-inflationary policies which Western leaders pursued in the face of recession did little to restore confidence or reignite growth, as consumers opted to continue to save. Meanwhile, the emerging economies focused on building domestic demand and learning the right lessons from the financial crisis. While the West only talked about coordination, the emerging economies worked together under a commitment to plain vanilla corporate lending and on-balance sheet transactions. This led to a new multilateral agreement that created disincentives for speculation and improved financial and macroeconomic risk management. When Western economies suffered a second major financial crisis in 2017, they were finally ready to sign up to what had become the buoyant East's new financial agenda. Today, financial regulations are not globally standardized, but there is significant harmonization and effective international coordination. This has resulted in a new sense of optimism about the resilience of the global financial system. These scenarios have been designed to challenge your thinking and provoke questions, such as, could we be underestimating the possibility of isolation or protectionism in a turbulent world? Are we in danger of only seeking to manage symptoms of the last crisis while ignoring deeper systemic risks? To what extent are markets prepared for non-financial risks or compounding events? Can markets and systems smoothly adapt to the demands of rapidly shifting economic power? We hope these scenarios might help you consider possible futures you wouldn't have otherwise considered, and hope you find value in reflecting on how your organization and industry might respond should they play out. With a better understanding of potential challenges and opportunities in the global financial system, we can be better prepared individually whilst collectively seeking ways to positively influence the future.